Kia ora, ngā mihi nui ki a koutou. E na raurangatira mā, nau mai, haere mai, whakatau mai I tēnei hui mariko. Ko Barry koutou hou ko te kārahi o te patea whai whakaro. Nā reira, tēnā koutou, tēnā tātou katoa. Tihe Māori ora. So a very warm welcome to you all. I'm Barry Coates. I'm founder and CEO of Mindful Money. Mindful Money is a charity that aims to make money a force for good, as well as providing radical transparency for KiwiSaver and other investment funds. We run seminars like this to educate the public, involve people in their investment decisions, and look at how we can shift investment so that it becomes a force for good on issues that matter. So this is kind of a big seminar. It's the last of our 20 seminars in this series. You can see our website for recordings on climate change, net zero, social housing, impact investing, investment in Russia, nuclear weapons, animal welfare, green property, ethical investment standards, Te Ao Māori perspectives, and nature-based investing, to name but a few. So there are many good seminars there and podcasts. But tonight, we're going to shift gears and we're going to talk about a subject that I think is long overdue for us to talk about in the context of investment. We're talking about the world of cryptocurrencies, blockchain technologies, and DAOs, decentralized autonomous organizations. So get ready to have your horizons broadened. I'd like to start off by extending a very warm welcome to the first of our panelists. This is Rowan Yeoman. Rowan is founder of Team DB, a member of the core team for SuperBenefitDAO, and a founder of socialleancanvas.com. His deep knowledge of technology, entrepreneurship, and investment has been applied to helping to initiate and grow many different ventures, including working with the Kina Foundation and founding startup weekend events. So, Rowan, a warm welcome to you. There he is.
Hey,
warm welcome, Rowan. Hey. I think we lost you for a minute, lost you in cyberspace somewhere for a few minutes.
It was all user error.
Rowan, can you kick us off and give us a framing of the sort of evolution of blockchain and crypto over a period of time, and kind of what does the scenario look like?
Gladly. Kia ora koutou, ko Rowan Yeoman aho. So I think when we look at crypto, blockchain, Web3, that whole sort of space, I think it's useful to kind of step back a little bit and think about what's the paradigm we're sort of moving through and what might this represent as a new paradigm. And I think you can sort of see that the fundamental technological shift sits on top of the system we've been running for the last sort of 400 years. 1600s, the creation of the limited liability company, sort of figured out how to centralize capital and ownership in such a way that you could innovate and then turn that innovation into scale. And so sort of fast forward 400 years in the Industrial Revolution, the establishment of the modern banking system, the finance system, the insurance system, and all of that around this paradigm. And what we need to see is that all of the machinery that was created around that potentially is sort of ripe for disruption at this point, because we've figured out that computers can make commitments. And that's fundamentally what's underpinning these sort of basket of movements and technologies, is this idea that you can get a computer to make a commitment, and therefore you don't need necessarily all the infrastructure that was managing that before, the sort of actuaries and ledgers and custodians and transmitters of information and things like that. And so that's kind of the shift. What we're seeing show up is, I think you describe it as experiments and kind of hype cycles that go along with these experiments. And so it's sort of beginning with cryptocurrencies and tokens that you'd sort of Bitcoin, Ethereum, and then all of the altcoins, and that sort of had their big hype cycle moment in 2017 and sort of burst onto the world stage. And then you had the DeFi movement, decentralized finance, and that's sort of essentially reinventing finance with decentralized underpinnings, fundamentally making it efficient. So figuring out how money can move around and do useful things in really efficient ways. And that had its hype cycle moment in sort of DeFi summer of 2021. And then NFTs that you've probably heard of as well, which is really this sort of way of managing ownership of individual assets on decentralized digital infrastructure. And so that started with art. It had its big hype cycle moment that's finishing probably about this week. If you follow everything kind of melted down this week, and that's the end of the hype cycle for NFTs, but I'll be back. And then finally, the last one to mention is Web3, which is kind of all of the experiments into shared ownership and governance via tokens and decentralized decision making. And the potential here is sort of how do we reimagine sort of what humans do and how we govern ourselves and all of that. And I'd sort of wrap it up by saying the important perspective, I think, is that this is all highly experimental. In 10 or 15 years' time, none of the things that are around now will likely be around, except perhaps for Bitcoin and maybe Ethereum, because, sort of 15 years of Lindy effect on Bitcoin, it might stick around. But there are no products yet. These are just sort of really difficult proof of concepts. And kind of infrastructure plays. What's going to be the underpinning infrastructure of this? So yeah, we don't want to fall into the trap of sort of deciding now what we think about any of it. But there are really important things happening here. And I think if you sort of add up that kind of paradigm shifting technology, this experimental environment that's really unlike anything we've ever seen before, it's that the experimental landscape is just exploding. There's tons of money being thrown around. And then lots of the best talent from finance and Web 2 is all just pouring into Web 3 and crypto. And so I think if you look at that, you kind of go, well, there's this paradigm shifting technology, there's people working on it, there's money and energy, something important's probably going to come out of that in the next 5 or 10 years. And just the last point would be the new economics that are kind of underpinning this mean that even though the products aren't here yet, it's possible to invest in, support, be part of the infrastructure that's being built in a way that kind of wasn't before with the early internet. No one profited from TCP/IP or HTTP or any of the core protocols that made it all possible. But now there is that ability to go in and actually start working on that infrastructure, and tokenized mechanisms mean that you might be able to, build a future out of that in some useful and interesting way. I'll probably wrap it up there. I could talk all day about it.
And we will come back to each of these issues. I kind of like the image of the hype cycle, but the underlying disruption around some of these hype cycles, like decentralized finance, is got a long way to go yet. So yeah, I can. I think that's a really useful picture. So thank you very much for kicking us off, Rowan. I'm now going to introduce Alex Sims. Alex is Associate Professor in the Department of Commercial Law at Auckland University, also Associate at the UCL Centre for Blockchain Technologies. She teaches a wide range of commercial law subjects, and her primary areas of research and publication are on blockchain technology, in particular DAOs, decentralized autonomous organizations, NFTs, the regulation of cryptocurrencies, and legal issues surrounding smart contracts. So, very warm welcome to you, Alex.
Thank you, Barry. That was a great introduction, Rowan. So with cryptocurrencies and blockchain, there's many things we could be here all night. But some of the issues around cryptocurrencies in particular, there's a lot of sort of misinformation. So most people would have everyone's heard of Bitcoin, I guess, and there's Ethereum as well. And one of the issues with Bitcoin, for example, and in fact, then everyone lumps is with the same thing as the energy usage. So I've heard people say, well, we use Bitcoin, we're going to destroy the environment. Most blockchains do not use high amounts of electricity. So they use proof of stake or other things. Bitcoin doesn't, but again, Bitcoin's only a small part of it. Ethereum does, but Ethereum is planning this year probably to move to a much lower energy thing. So there is that. Also, another feature is quite a few people think like a lot of the DeFi is being built outside of the existing industries to disrupt it. But equally, existing industries and companies are using blockchain in a method to shore up because they realize change is happening. So, for example, even Swift. So Swift is sending payments overseas. They're looking at blockchain solution. Almost every single central bank is looking to issue its own central bank digital currency because they can do things that our existing money cannot do. We can't program, we can't automate it. So it's not this thing these weirdos are doing it. These are mainstream, everyone is looking at it. It's not going to go away, as Rowan said, but we don't know what it's going to be like. It's a bit like with the dot-com boom. There was all this hype, all this flurry, there was all this excitement. Most of those things died away, but the solid basis was there. Another quick thing with the misconceptions is Bitcoin and Ethereum, for example, with the price is very volatile. But there are lots of cryptocurrencies called stable coins, which are actually designed to remain stable in price. And that is what a lot of businesses are using because it's just more convenient. You can do a lot more things with them. And that's one of the main reasons why the central banks are coming along to create their own digital central bank issued digital currency, including New Zealand. So the Reserve Bank has said we're going to do this, and they're working on designing and implementing a CBDC. No timeframes, but I wouldn't be surprised if it was in 5 years because the time is on. And also, just another quick thing, it's not just decentralized cryptocurrencies, you've also got China. So China's got the digital yuan, which there are fears that could replace the US dollar as well. So there are a whole lot of things in play at the moment.
Interesting. So I guess what you're saying is many of the critiques of Bitcoin around energy use and use by organized crime, etc. Many of those critiques are based on a kind of first generation of cryptocurrencies, which are now moving on into new forms that aren't so destructive or
Yes,
don't carry the same side effects.
Yes, but also just with the criminal use, that's been something leveled at Bitcoin. And any new technology, the criminals sort of take advantage of it. But the usage by criminals of Bitcoin and other cryptocurrencies has fallen dramatically. And all the estimates is that money laundering and other illegal activities, there's far more of that in the current banking system. And so my sort of joke is, if you're a criminal, why on earth would you be learning a new system when the current one works perfectly fine? There are billions and billions of dollars going through. So it's a red herring, honestly.
Yeah.
And it's a lot more transparent. I mean, you would be foolish to use Bitcoin for criminal activities. There are some coins, privacy coins, which you could use, but again, they're not used very much. So it is very much a red herring.
Cool. Great. Thank you very much. And again, we'll come back to some of these points. I'll introduce our third panelist, and very warm welcome to Andy. Andy Ayrey is a technologist, designer, and product strategist who supports organizations creating existential hope, which I think is really cool, Andy, to describe that. His clients run the gamut of domains from lunar policy to steward ownership and most recently Web3. Andy's in the core product team for Cube, a Web3 startup developing tools for decentralized coordination, which may be an oxymoron. But anyway, Warm welcome to you, Andy.
Thank you. Yeah, so I guess I am a bit of a product guy, and I get really excited by the possibilities of new technologies, and seeing the emergence of blockchain technology and everything that goes along with it has made me feel a little bit like I'm on the internet in 1994. It feels like it's ripe with opportunity. Everything's kind of an experiment, and the full potential of these technologies hasn't really been even been imagined yet. Like Facebook wasn't conceived of until 2004, and that was even until like maybe 2007 or 8 when it really hit its stride. So it's really, really early days. But some of the properties of these sort of constellation of technologies, I'll just refer to as Web3, are really, really interesting. So I'm just going to talk a little bit about some of the experiments that I'm seeing run and what's got me excited about the space. So I think that the first thing that I find really fascinating about these technologies is the way it flips identity and ownership of assets. Now, in the old way of doing things, you have your Facebook account, and you might use it to log into Spotify or something. And Facebook has your friends list and a whole bunch of other stuff, your photos, and all of that is owned by Facebook. Delete your Facebook account, you lose your friends. You lose access to your music through Spotify. Web3 kind of flips this so that you could have your friends list in your wallet. And then you take your wallet, use that to log into a social network, and you give the social network permission to have your friends list and help you find your friends in that environment. But if they go under or if they develop an unethical business model, you can take it away again and walk somewhere else, which I think is like going to lead to a Cambrian explosion of new business models for how we deal with ownership of people's and usage of people's data. If you can take your data and walk, it's suddenly a more equal standing with the big social networks. Another thing that I find I think has a lot of potential in this space is around rights management and sort of crowdfunding for, say, music. So using tools that exist today, if I'm a musician, I can raise money directly from my fans and sell them a certificate, an NFT, that entitles them to streaming royalties, a portion of streaming royalties on the song that they helped fund. This certificate, it's programmed into it, will entitle them to those royalties as long as they hold the certificate. So, you know, if your favorite artist makes it big, you win along with the artist, which I think is a really, really interesting opportunity for changing the relationship of artists and their audiences. And by far my favorite is climate accounting. So there are a suite of experiments currently happening here. One of them is called Regen Network. The other one's called the Toucan Protocol. And both of them are developing ways to essentially buy carbon credits on the sort of voluntary carbon markets, retire them, and get a digital twin in exchange that's programmable. It can be used as a building block in all sorts of other sort of experiments and markets, such as putting offsetting directly into your apps. Whenever someone takes an action that burns energy, you can offset the carbon. There's a whole bunch of new instruments being created around this, which I won't get into at this point. But one of my favorite things that I've seen is a piece of artwork called CO2 Compound. Without getting into the technical details of it, it's programmed into this piece of digital artwork that it's got currently 31 tons of carbon permanently bound up in the artwork, but it compounds over time. It's plugged into another system that essentially means that the artwork will irrevocably and forever compound the amount of carbon that it has locked up, and that can't be taken away from the artwork. It can't be sold. The artwork itself is an economic actor in the carbon market, which I find really, really thought-provoking. So
very good, very good.
There's a few of my favorite things in Web3 at the moment, and go on, but I'll leave it there for now.
Yeah, really interesting, and I think it's kind of almost like a thought experiment to say where can this go, and so let's bring the panel back in. So Alex and Rowan, please rejoin us. Great. So let's kind of pick up a few threads of this conversation. I really like the way this is kind of emerging to be about the possibilities that we look at now, and we see kind of something that is very ephemeral, because the future isn't going to look anything like what's in front of us now in the application of these technologies. Can we expand on this a little bit more? Because I think it's a really good thing for people to be able to understand that what we've seen as a first representation is not going to be the final form of the use of these technologies. Maybe if you kick off, Rowan, and talk a little bit more about that.
Ooh. So the question is, what is the potential future for how these things can evolve? And I think what I'm looking at the moment is we've sort of got these broad categories. We've got DeFi, which is basically money in any form you can imagine, doing any possible thing that might create value via the internet. You've got Web3 and DAOs, which is the sense of any group of people coming together and doing anything you can imagine, but are governed in a decentralized way. And I think as we evolve forward, it's going to be about the sort of emerging categories across those spaces showing up, and we'll start to get to something that looks like kind of best practice or kind of industry categories. And I don't think they'll be ever as set in stone as the industry categories we perhaps have now. They'll always be more emergent, because I think that's just part of the nature of the thing. But that's the thing that I'm looking at, is what is how might we sort of categorize, what's the typology or taxonomies that start emerging, and we can start to kind of go, okay, experiments are great. How do we take some of these things and actually start using them in effective ways in the world? And I think that's sort of moving from experimental to actual useful applications that can generate scale will kind of actualize this thing a bit more in the world. And we'll start to then get larger things, larger projects that bigger infrastructure can attach itself to.
Yeah. So just to follow up on some of that line, so the DeFi issue is for most people connected with open banking, with the decentralization of banking and finance services. So can you talk a little bit more, and maybe Alex, you want to kind of expand on how that particular aspect is changing and may change in future?
I think the open banking is not quite the same as DeFi, because open banking is effectively, unless I've got it wrong, you're just sharing your details with other organizations, whereas DeFi is not so centralized at all, and you're using cryptocurrencies and other things. You don't need cryptocurrencies for open banking, but it is a real, even open banking is a real game changer for the banks, because they run the risk of being dumb pipes and other people are effectively getting the data. So they, and the banks know this, and the banks are, they've been trying to, fend off even open banking in New Zealand, because around the world, like the UK and Australia, It's been mandated. We're a bit slow here. But what the banks need to do something, okay? Because if you look over history, all institutions and things, they've failed over time. And so the banks, need to embrace this. They need, for example, even to act as custodians for digital assets, because while yes, people can self-custody, people are losing things. They're forgetting their passwords and things like that. So there is sort of a business case there. And Commonwealth Bank in Australia have said that they will do this, but they're facing real obstacles from the regulators, and which is quite ironic because Australia is trying to be a home for these type of things, but the regulators are people that there just don't understand it. So it's part of it's a real education. It is evolving, and also because it's international, if you are too prescriptive, people just go offshore. There's regulatory arbitrage all around the country, all around the world, and we're seeing that. So they don't want to have a race to the bottom. And another quick thing is you also got to be careful from a consumer protection, because if you make it really difficult for people to operate in New Zealand, for example, then people in New Zealand will just go and use product services overseas where they've got no protection. So, it's a real sort of regulatory uncertainty at the moment with people. And another quick thing is, just to Rowan's point, is that now when people are setting up, especially online businesses, they've got a choice. Do they use a centralized company or in the States an LLC, or do they use a DAO? And people are already doing that. So we've got online games or online metaverses that are already running as DAOs and being very successful. So, there is increasingly a choice. It's very unlikely that existing company would transition to a DAO. So it's when people are starting something up, there's already that choice there.
And Andy, you've been associated with a number of DAOs in your work. Can you describe to people a little bit about the advantages of the form as opposed to, for example, a normal corporate form?
It's funny you mentioned that. I'm pretty new to the DAO space, so it might be that Ro will be able to expand on my provisional understanding of the advantages here. But what I find really compelling about them as a model is that they're essentially like a digital version or a digital successor to a cooperative. So they're kind of like owned by the people who are doing the work, and the governance takes many forms, but a few patterns. It's very like self-organizing, and the direction is kind of set emergently. And what else captivates me about them? The fact that the technology that you use to set agreements between people, like, in traditional companies, you've got your shareholders agreements and you have, your shares, and you pay people in dollars, and then you've got like the software that you're using to run the company is like built, it's like Xero and all of those. With a DAO, there's this kind of like convergence between the sort of like legal documentation of running like a company and the forms in which you sort of compensate people for doing work, and the forms by which you do project management and define the work, and they're all kind of like merging into this one soup. I'm not quite sure where that's going to lead, but maybe.
Yeah, and Rowan, I read an article where you described DAOs as being more like a flow than a kind of an endpoint, and more like a network than a single entity. Can you kind of expand on that?
Yeah, Very much. I think the opportunity with DAOs that's emerging is this notion that when you had the limited liability company, you had this entity that you could focus on and then form capital around and ownership and operations and sort of the whole sort of mechanism. But we were very much focused on the entity itself. And what DAOs, what the sort of new technological paradigm allows us to do is actually sort of refocus our lens down onto the actual individuals that are involved. So rather than just having a monolithic company that decrees things and people go and work there, you can actually coordinate this network of individuals that are essentially kind of doing the value creation work that a company would do, but you can coordinate them as individuals. And so if you think about a company is essentially coordinating a network. So they have a supply chain and they have, suppliers and customers and staff. And there's essentially this whole network around a company, and the company sits in the middle and coordinates all these things in a way that becomes profitable. With a DAO, you can imagine the network itself as being the sort of main actor, and the individuals in the network are being coordinated in oftentimes these emergent ways, and capital can form through that network, and activities can form through that network, and the suppliers and the builders and the customers, they're all part of that network. And what the sort of new tokenomic models that are emerging allow us to do is coordinate all these things in ways that are game theoretically non-zero sum, if that makes sense. That fundamentally every actor in the network benefits when the network prospers, as opposed to, say, a traditional company system where every actor in the network is trying to do the best they can for themselves. So a supplier is trying to extract the highest price out of the company, and the company is trying to extract the lowest price out of the supplier. And whereas you can sort of you can go up an order of complexity and say, well, actually, we're all trying to get this network to function because of the tokenized system that we have, that we all benefit when the token value goes up, or what the various sort of mechanisms are. So I think that's the fundamental difference, is humans can coordinate in a fundamentally more sophisticated way via DAOs, because individual agents in the system can direct themselves, but it's not just a cacophony of chaos that you might expect if you didn't have those mechanisms.
Just very quickly, just on this. It may seem science fiction, but it's already happening. And in Australia, they have said they'll change the law to recognise DAOs, to change corporations law. So this is not hypothetical. This is happening right now.
And what are some of the manifestations that people might see of it? Are there any particular companies or networks that you can point to that are kind of visible now? I mean, just to be simplistic, the old Anglo-Saxon way of doing business was company, and the company had some suppliers that fed into it and customers, and increasingly they got overtaken in a way by Asian models of interdependence of supply chains that were operating in a cooperative way and collaborating and not using a zero-sum game model in order to create a very different business system. I mean, in a way, is this also a kind of organization that mirrors some of those reciprocity chains that you've had for a while emerging in business?
I don't know so much about that, but what it is that it's the ownership and the governance. So it's like Andy said before, more of a co-op, but it's not it's people within the DAO, not just voting on proposals put forward by management. It's people within the DAO making those proposals, which then other people vote on, and they've got the ownership. So it really it almost cuts the distinction between capital and labor that now melds. But you can do all sorts of things. Not everyone has to have voting rights, for example, and so there's all different types of things you can do. So it is a radically different type of beast from what we've had before. It is, and I guess a co-op is probably the closest one. But even then, with co-ops, you often have a central committee, a management one. But a lot of DAOs have moved away from that. Not all of them. Some of them do have a committee, but it's still different. It's still not the same type of thing, because managing people decentrally is difficult. So even though I've got these really cool tools, as Rowan was saying, you've got game theory and you've got a whole lot of other things as well. And one of the things with DAOs is they can be very brittle, because you've got these pre-coded rules and you can't foresee everything that's going to happen. And so some of the DAOs actually have technical committees. And so if all of a sudden there's a hack or something, you can't sort of wait for someone to put a proposal through and then wait a couple of weeks for people to vote. So you need someone to come in and make some changes. So there's got to be some delegated things. So, and some of these DAOs are controlling tens, if not hundreds of millions of dollars. But if anyone wants to go and experience something that is being run as a DAO, there's Decentraland, which is a metaverse. So that is being run as a DAO. It's working very well, and it's being also used by traditional companies. I think it's Deloitte. Like Deloitte has got a presence there. So this is mainstream organizations who are got a presence there.
And just on that question of sort of what's actually happening currently, the way DAOs tend to be run is in this open way. And so a typical DAO will use a messaging platform like Discord, and basically everyone in the community will join Discord. It will be free to join, and whoever wants to participate will participate. And they often start with maybe 5 or 6 people kind of that are really core to this thing, shaping it up. And then other people will come in and add commentary, and then maybe they'll come and start working, and then maybe they'll start getting paid or earning some tokens or something like that. And you've got this larger community outside that are sort of looking in because they're interested, and everything's transparent and you can see what's happening. And that larger community will be where the capital ends up coming from to capitalize it. And to Alex's point, there's, when you're actually working in this space, there's hundreds of DAOs that are sitting on multi-$100 million treasuries and doing lots of really interesting things in the world. Like once you sort of part the curtains on Web3 and look in, like my sort of first introductions into Web3, for months, it was just head spinning of like, I cannot believe what's going on here. I cannot believe the sort of quantums of money and activity that we're talking about. But it's because Web3 hasn't really had its moment in the sun yet. It hasn't really made it to sort of prime time consciousness. People just aren't aware of what's happening. It's quite extraordinary.
Yeah. So we're going to come back to some ways that people can find out more about this and find their avenues to pursue anything that may be of interest. But I just thought I'd say anyone in the audience can ask a question, and we'll come to those in a minute. Andy, I wanted to ask you, I know that some of the stuff you've talked about is offshore stuff happening in the United States or happening in Europe and so on. Is that because there's a more sophisticated kind of development of Web3 applications internationally, or are you also seeing a lot of stuff happening locally in New Zealand?
Well, the company I am working with at the moment, they're distributed, all over the world. They've got quite a few, like a development team in Wellington, but then their sort of key contributors are scattered all over the world. They've got a few developers in Venezuela, and as I understand it, that's not super uncommon. It's actually really hard to say where people are from in this space, or where things are headquartered, because people don't necessarily go by their state names. They go by their handle. So be like, I'm anti-Ayrey.eth, but some people will just be something completely off the chain, and you'll never actually know like who your who you're talking to, because they've got like a photo of an ape as their profile picture. They get paid in Ethereum, and like, I mean, sure, they seem to be active on Discord between like 3 a.m. and 9 a.m. like New Zealand time, but that doesn't really mean anything because developers are nocturnal creatures. So it's honestly impossible to say where like the density is from experience.
Right.
But yeah, to kind of like address the like technological sort of like literacy, I mean, I do think there is a angle by which it would be, it feels like this is like an opportunity for New Zealand to like attract some world-class talent. I do have a fear that if we get the regulation wrong, then like, you know, this is New Zealand, like we had FPOS and a whole bunch of like other stuff well before the rest of the world. And I do fear that if we sort of over-regulate or regulate in that sort of wrong direction, like by pretending that we know what this thing is yet, we could close those like doors to being a leader in this like next paradigm of the internet and the way we conduct business. So
Alex, you probably see some of that regulatory reflex from your role in Auckland University in commercial law.
Yes, and also what people are doing, like someone sent me a thing today, there was a rug pull in NFTs. That's when someone has something and then whoop, they take the money and run. But that was illegal. Okay, that you don't need new laws to do that. So the laws are already there. They just need to be properly managed. And also things you've got. The worry is if you do over-regulate, say for NFTs, then the people that want to use it legitimately, the artists that will actually help, won't be able to do it. And the baddies don't follow the law. So, it's a zero-sum game. And actually I just saw in the chat, there was a question about the energy usage of Bitcoin, which I sort of mentioned at the beginning, but doing a bit more on it. Yes, Bitcoin does use electricity, but that is just one part of blockchain. So we've got all different blockchains. So just because one of them doesn't mean to say all of blockchain technology does. And also it is possible to use Bitcoin without sending transactions without the high energy fees with using the Lightning Network. So it's part of it. So that's another way of getting around it. But also, again, with Bitcoin, blockchain, it sort of makes visible how things work. So when you think about the normal banking system, we don't think about all the trucks that are moving money around, all the banks that are all their infrastructure and things like that. So it's, you've got to be cognizant of that. And if people don't like Bitcoin because of the energy usage, then don't use it. No one's forcing anybody to use it. And there's other ones. And it's a bit like, Bitcoin was the first blockchain. The remarkable thing is that it's still around, because normally the first example of something, dies. We're not using the first search engine or the first social media one. They've all gone. We don't use early cars. It's almost like Bitcoin can be a bit like a Model T Ford. Okay, it's slow and it goes. But other blockchains are equivalent of Teslas. Okay, so very energy efficient, they go very fast, type of thing. So just got to be careful about painting all the cryptocurrencies and all blockchains with the same brush.
Yeah, I've read article of yours about beyond Bitcoin, sort of trying to educate people that actually that's not the anymore the kind of state of art for crypto. So sort of beyond the critique, there's going to be a lot of people who are listening to this tonight saying, "Yeah, this sounds really interesting. I know nothing about it." Where can people start to find information and go to really see what the implications are for them, their work, their life? Any ideas, Rowan? You got some good sources that people can go to?
Yeah, I think the first question is, what are you interested in? Because it is a, it's a smorgasbord. If you're interested in art and NFTs, there's a whole bunch of commentary around those and interesting things to look at. People usually come in via crypto tokens. So they start off, maybe they invest a little money in Bitcoin and Ethereum, and it's sort of, you start to get a sense of, well, what does it mean to, have custody of your own, private keys, and how do wallets work, and how does a ledger, like how does a distributed ledger actually work? And so that's the sort of, like what I said at the start, the paradigm shift is this sort of underpinning of computers that can make commitments. And so often people will start, that way. If you're really interested in the social side of things, or the environmental side, Andy mentioned Regen Network, and there's a whole bunch of really interesting projects and protocols around regenerative economics and all of that kind of stuff. So in terms of pointing people in useful directions, YouTube has lots of great content. Like, someone is going to, make a buck out of explaining how something works, whether it's fixing your washing machine or, learning, how to use DeFi. So yeah, there's, I won't list off a bunch of things because it would just be a bit of a mess, but there's lots of useful content. And for me personally, podcasts I find the most useful. So if you can ferret out the really good podcasts, if you're interested in DeFi, then Bankless podcast is a really good one. They do the Friday roll-up, where they basically say, this is everything that happened in DeFi in the last week. And you start to kind of imbibe the language and the framing, and you hear about the projects, and you start to sort of sniff out the things you're interested in. And so, yeah, if it was me personally, I'd go looking for, if I was DeFi, I'd go look at Bankless podcast. If it was, Regen and those sorts of things, I'd look at the Green Pill podcast from Gitcoin. There's, there's Coin Bureau, if you want to learn about crypto tokens and things like that. Yeah. But it's very much immerse yourself in it and start to get the feel for it. There isn't just a 101, you'll be able to do something after learning this one thing.
And Alex, there's no doubt a pretty strong academic network around these issues, or has it mainly been ignored by academia?
It was being ignored, and I got laughed at when I started researching it.
I remember you've been on this for a long time. It's great.
Yeah, but now I'm having the last laugh, and slowly people are sort of now doing it and it's interesting from all different angles. But just for learning about it, just Google or whatever search engine you use, whatever industry you are in, and put blockchain next to it, and things will come up about it. And it's good to put it into context, because if it's abstract, you go, well, this doesn't mean anything to me. But just to see how it's being used in your particular industry. But another quick thing with it, though, to understand it, is it's not like you say with the internet, you putting up a website. Okay, that was all very fine. Blockchain really only works when people is effectively a network. So in a supply chain, everyone in that supply chain needs to be using the same system, and people don't really like that. You can get it sitting above, so you've got your ERPs and everything talking into it, but I always say it's not the technology that's the issue, it's actually people. So people are very comfortable in what they're doing, and also there's sort of some core tenets, and part of them is transparency. So things are transparent, like Rowan was saying before. You can see in the Discord, you can see what's going on, and a lot of people again don't like that, but business is changing. And so, it's part of that paradigm shift. When someone's put trade window uses blockchain, yes. And also Maersk is another one so more than half of the world's shipping now uses blockchain in the background, but you wouldn't know about it. And I know of lots of New Zealand and other projects and things that are using blockchain, but they don't say it, okay? And because they don't, it's almost, blockchain has still got a bit of a negative connotation. So a lot of people probably use blockchain already and not even realize that they've actually used it.
I've been involved in a lot of environmentally oriented or socially oriented certification systems, and blockchain is ideal for those in terms of, as you say, Rowan. It's about registering in a computer where stuff comes from. And so, Andy, what about you? Where are some good directions you can send people to?
I was just thinking about that. There's two people that I follow quite closely. There's Rich Bartlett, who co-founded Lumio, which is a decentralized decision-making tool, and he's written some really good introductory pieces into the space. And then there is a podcast with it. I'll need to dig up the link, but a guy called Balaji Srinivasan, and he has this it's like a 3-hour episode on the Tim Ferriss show, which he did early 2021, and it's fantastic. It's really a huge eye-opening window into the world and the way that sort of adjacencies that it opens up. So I'm not sure if you're going to circulate like a show notes or something afterwards, but I could certainly dig up the links if there's going to be any after seminar comms.
Yes, well, we'll be including some stuff on our website in future, so we can include some of these sources there. Would be great. I think we'll wrap it up there. Thank you all very much. That was a real education for me, and I'm sure for others, and a lot of people on this on these seminars approach kind of the seminars from the perspective of investment, and I think their initial take on it is around speculation and Bitcoin being the way crypto is represented in investment. And I think what the conversation's done is kind of open up a whole new world to say, actually, the world of investment is going to be profoundly changed by some of these technologies in future. We're not quite sure how it's going to happen and what's going to be manifested, but it's going to be very significant. So thank you very much for leading us through those issues and joining us tonight. So this is kind of the end of our series. We've done 20 seminars. We started on 20th of October last year, and I'm deeply grateful to the 54 panelists we've had on the series, and to my colleagues Olive Coulson and Karen Swainson, who made the seminars happen. Thanks also very much to our sponsors for the series, AMP, Booster, Generate KiwiSaver, Harbour Asset Management, and PwC. I would like to do a plug for Mindful Money's forthcoming conference and awards ceremony. These awards cover ethical investment, impact investment, media reporting on investment, financial advice, etc. And that's being held in Auckland on Tuesday, 28th of June, starting at 3:30. So tickets are available on Mindful Money's website for that conference and awards. Minister David Clark, who's Minister of Commerce and Consumer Affairs, is going to join us together with lots of other great speakers, and Tereda as MC for the awards. So join us on that, and thank you to all of you who have joined in the audience for the seminars tonight and for previous nights. And thanks again to our panel for tonight's show. So, ngā mihi nui kia koutou, ka kite anō.